Hi guys, it's Stock Curry, and in today's video we're going to look at the technicals in the stock market, and I'm going to explain why I think we're entering a bear market and not just a correction. I also want to go over some details on some earnings, including Apple and Tesla. So let's get into it! Okay, so regarding the technicals, we are seeing the markets get absolutely devastated right now, and they are barely holding on to some key technical levels. Taking a look at the QQQ, which is a NASDAQ 100 ETF, we can see that it is already trading below the 300-day EMA, and it is struggling to hold on to a support level of $341. And taking a look at SPY, which is an S&P 500 ETF, it is also trading below the 200-day EMA, and it is also struggling to maintain a strong support level at $426. Now, if the NASDAQ or the S&P fall below either one of these support levels, we could see a lot more pain in the months ahead. And what kind of pain am I talking about? I'm talking about stuff like Netflix dropping down to a level that it has not been at since the March 2020 crash. We are seeing stocks break below support all over the place. We see Facebook that is now below a level that it has been trading at for the past 4 months. And Tesla's even worse. It just dropped below an upward trend line that it has held for the past 2 years. So stocks are breaking support levels left and right, and if this continues, we're going to see the market continue to fall for we don't know how long. Now, I'm going to say this. I've had a lot of people tell me that we can't possibly be entering another bear market because of all these reasons why it's different from last time. Well, let me tell you something. It is always different from last time. People have been saying it's different this time since the tulip bubble in 1637. I've heard people say that we can't enter a bear market this time because we don't have all of the subprime lending like we had in 2008. Or they look at the dot-com bubble and they say, well, we don't have valuations that are sky high like they were in the dot-com bubble. Or they look at the 1980 period and they say, yeah, inflation was really high, but our economy is a lot stronger this time. The fact is, every bear market is always different. In fact, in the 1999 era, people were saying that we couldn't possibly enter a bear market because the economy is strong. In 2008, people were saying we couldn't enter a bear market because valuations weren't high enough. And now people are saying we can't enter a bear market for pretty much all those reasons. And I'm here to tell you that this is actually a lot worse because we actually have, from the last 3 major recessions, all 3 indicators. We have the super high inflation from the 1980s. We have the super high valuations on stocks, especially large cap stocks, like we saw in 1999. And we have real estate prices at extremely elevated levels, just like we saw in 2007. So literally all 3 reasons for bear markets from the last 3 major bear markets are relevant in this particular market environment. We have sky-high valuations that have not been this high since 1999. We have real estate prices that have not been this inflated since 2007. And we have inflation that has not been this high since the early 1980s. So literally every single thing that has triggered a bear market in the last 3 bear markets is present right now. So it's really looking strong, like we are in fact going to enter a bear market. Now, like I said before, bear markets are not fast. This is not like the March 2020 market crash where we go down for 1 month, we bottom out, and then we start going back up from there. If you think we are at the bottom right now, hold on to your armrest and tighten your seatbelts because we are in for a lot more pain. This is just the beginning. Yes, I know, it is the worst January in the history of the stock market. And that says a lot because the stock market has been around for over 100 years. And this year, right now, 2022, is the worst January in the history of the stock market. This is just a little indicator of how much pain we are about to go through. Now, the other thing that I've seen a lot of YouTubers look at that is just causing a lot of confusion is they're looking at the fact that normally when the Fed raises interest rates, we see the stock market go up after a certain period of time, typically about 3 months. And so they're saying, well, you know, the Fed's going to raise interest rates and the stock market's going to go up and everything's going to be just fine. Well, that's not always the case. You got to understand that normally when the Fed raises interest rates, they're raising interest rates because the economy is very strong and they feel like they can raise interest rates and not affect this really strong economy. However, there was one point in time where the Fed raised interest rates for a very different reason, and that was the early 1980s. In the early 1980s, the Fed saw very high inflation, and they knew that they had to raise interest rates in order to get inflation under control. And that is what's happening right now. We don't have a super strong economy. I mean, the economy is doing well, and there's no doubt about it, but it's not really super duper strong. The reason the Fed is raising interest rates right now is because of inflation. They're afraid that inflation is getting out of control. In fact, the Fed actually said that if they don't do anything, inflation will continue to get worse. Now, the reason the Fed has to step in, they have to stop inflation, is because if they don't, we will enter a period of hyperinflation and the dollar will decline just like it did in Venezuela, just like the monetary currency declined in Zimbabwe, just like it declined in Turkey. We could enter a period of hyperinflation just like a lot of other countries saw if the Fed does not step in and put a stop to it now. And in order to step in and put a stop to it, they have to raise interest rates. So this is not like a lot of other stock markets where the Fed is raising interest rates because we have a strong economy and companies are going to continue to report good profits and everything is all fine and dandy. That's just not the case this time. Right now, the economy is kind of right on an edge. I mean, it's doing well, but it could fall apart pretty fast. The only reason the Fed's raising interest rates is to stop inflation so we don't get into a period of hyperinflation. The point of me saying all of that is if you look at the technicals, if you look at the fundamentals, it's not good. This is not the bottom. We are not in a correction where things are pretty much over and we're going to start going back up. We are in a bear market, and things are going to continue to get worse and worse and worse. Okay, now I want to talk about Apple earnings that just came out because they were actually really good. Now, one thing to keep in mind is that Tim Cook does not provide forward guidance on AAPL. And the reason he does not provide forward guidance is ever since the pandemic started, he said there's just been way too much uncertainty, so they stopped providing forward guidance. But they had major beats in the last quarter. They pretty much beat on everything that analysts were predicting. In fact, the only thing they did not beat on was iPad sales, but everything else they beat on. And we saw the stock rise 5% after hours. Now, this is really big news for the stock market because Apple is the largest company in the United States. Actually, it's the largest company in the world. And Apple, when it goes up, it brings the entire stock market up with it. When Apple started rising after hours, we saw every single stock in the S&P pretty much rise. So we saw Tesla rise, Microsoft rise, I mean, you name it, it all rose when Apple started rising because everybody knows that as Apple rises, it brings the entire stock market up with it. And that's why the futures are up right now as well, is because Apple was up. Now, there was one key thing that Tim Cook said during the earnings call that was huge. And he said that supply chain constraints are expected to ease for Apple in the next coming months. So in other words, he's saying that the supply chain issues are going to get better over the next couple of months. And this is huge news for the markets because every single company that has been beat down due to semiconductor chip shortages, for example, like Tesla and Ford and a lot of the other EV companies, they are now able to start rising again if the supply chain constraints are now easing. And this is really, really, really good news. So I think this is going to bode extremely well for everything from NVIDIA to Intel to Apple, Tesla, you name it. This is just going to be really good for the stock market. Now, at the same time, it's going to give the Fed more firepower to actually go in and raise interest rates some more. So in the short term, I think we'll continue to see some hurt and pain from the Fed raising interest rates. But once the supply chain constraints start factoring into earnings, hopefully next quarter, but if not the quarter after, we should see the stock market start to rise. And that's why I think probably in about 2 quarters, we'll see the supply chain constraints easing and deliveries and production start to increase. And that will all come out in about 6 months from now. So I think 6 months from now is probably where we start to kind of see a bottom towards the bear market. But I did think we'll have another 6 months of pain from here. In other earnings news, Robinhood shares sank as much as 15% after hours to a new all-time low. And I gotta tell you, I mean, Robinhood deserves it. They created their position close only orders on GME and AMC and others, completely screwed over retail investors, and millions of retail investors have left them and gone on to other brokers. And I gotta tell you, if you're still at Robinhood, what are you doing? Like, get your stuff over to Webull. Webull right now has got a promotion. If you transfer your account over to Webull, you get $75 free, so long as you transfer at least $2,000. And when you make a deposit of $1 or more, you get 2 free stocks worth up to $3,300. And on top of that, when you make your first crypto trade, you get $5 in free crypto. So they just have an incredible offer right now. Plus, Robinhood limits you on when you can trade pre-market and after hours. Webull doesn't. Webull offers the full pre-market and after hours trading from 4 a.m. till 8 p.m. Eastern time. And Webull makes it very easy to trade multi-leg options. Guys, I'm not just here selling it. I'm telling you, there's a very good reason that I'm with Webull and not Robinhood. So, if you're interested in switching your account over to Webull, if you're still stuck with Robinhood, then you can sign up using my link below, and you can get all of the offers I just mentioned, the $75 free for the transfer, the 2 free stocks worth up to $3,300, and the $5 in free crypto. And you just got to sign up using my link in the description below. Now, the next earnings I want to give an update on is Tesla. Now, I know Tesla actually came out with earnings yesterday, but today the stock dropped 11%. It originally rose after hours yesterday, and then today just tanked. And that's the thing, the 11% drop today actually brought it below that 2-year upward trend line, which was just shocking to me and a lot of other people. And the reason is Tesla, well, Elon Musk says they're looking to switch gears a little bit. Elon Musk said they're not going to release any new vehicles this year because they want to focus on building robots. In fact, Elon Musk says that robots are more important than their cars. Now, this is bad news for everybody that was buying Tesla because of their vehicles. And it's also bad news for everybody that's been waiting for the new vehicles to come out, including their Cybertruck, their Semi, and their Roadster. So I don't know what Elon Musk is thinking here, but then again, a lot of people had no clue what he was thinking when he tried to make the EV many years ago. So maybe he's a genius, and maybe robots are the future, and he's going to sell a ton of them, and we're going to see Tesla rise to new insane valuations. I don't know. But right now, it's scaring a lot of people. A lot of people don't like it, and that's why the stock dropped 11% today. Okay, that's going to wrap it up for today's video. I hope you enjoyed the video and got a lot out of it. Comment down below what you think the stock market is going to do over the next few months. And remember, if you're looking for a group of traders that you can communicate with day and night and get trade ideas and help you make some money, I do have a free Discord. It is available at stockcurry.vip/Discord. There's just a real short questionnaire you got to fill out. The application is just there to prevent scammers. Truth is, everybody who applies gets approved. So come join us at the free Discord where you can talk about stocks day and night. And also, if you are looking for a broker to trade with and you're not in the US and you can't get access to Webull, I do recommend Interactive Brokers. Interactive Brokers is, in my mind, the best broker for non-US residents. They also offer the full pre-market and after-hours trading. They also have highly discounted trading with trades start at just $1 Canadian, 4 euros, or 6 Australian dollars, depending upon where you live. And they also offer options and multi-leg options on Interactive Brokers as well. So if you're interested in that, I have a link for Interactive Brokers in the description of this video as well. All right, I hope you have a lot of success trading, and I will see you tomorrow.